Welcome, everyone. It's the Cryptolark. Super excited to have on today veteran trader Scott Melker. Scott, how's it going?
Going great, man. Thank you so much for having me today.
Thank you for coming on. I've been following your Twitter account for a while, and for anybody who's not following Scott yet, I'm going to leave a link down below to his Twitter. He also does a really awesome free newsletter. You guys should definitely get signed up to that as well. Amazing trading insights. But I've been watching you on Twitter for quite a while, and you're sharing all this just great advice about risk management and trading and sharing your experience of the trading. And I wanted to get you on today to talk a little bit about that kind of trading experience and your lessons that you've learned over time and all that fun kind of stuff. But I want to start off with a bit of a softball for you. Maybe it's a softball. I guess we'll see how the question goes. But you're not just people like to put people in boxes, right? But you're not just a trader, right? You're a man and a father and a husband, all this fun kind of stuff too. But you're also, very interestingly, a DJ. So
Yes.
I want to talk a little bit about that just before we get into all the fun trading stuff. And tell us a little bit about the DJing scene. But also, I really wanted to know from you, as a DJ, somebody who's into music, where do you see the big trends in music going in the next few years?
I see them going really far from anything I've been interested in, which is why I don't DJ very much anymore, sadly. um, but really, I pretty much stopped. I had a long career. I was DJing for over 20 years, and pretty much in the last 4 years, my daughter is 4.5. Not coincidentally, that's when I've really slowed down and stopped. And now it's just a couple times a year when it's something that I really want to do. So yeah, I mean, that music was always my passion from childhood. I started with the piano when I was 5. I was, taking singing lessons. I played the saxophone and kind of could diddle around on any instrument and started producing and stuff. And really, it was just sort of always my passion. So it was just a natural path for me, even aside from all the other things I was interested in. But I'm like a total ADD case, so I am interested in everything, and I, played every sport and did every hobby and read every book, and I just all over the place. So yeah, like you said, it's funny, especially in a place like Twitter where you start talking about something that maybe your followers weren't familiar with or expecting, and they have you in that box, and it's like, shut up, man, stop talking about music, go back to crypto. Or more often, like, you're just a DJ. What do you know about, trading? Something like that, and kind of that's endless regress as you just go down that path with people. But as far as music trends, I mean, it's an interesting time in music because I think what makes it to the radio is follows a pretty specific formula. Obviously, like
Mm-hmm.
it's very pop. It's very, as I said, formulaic. It's kind of anyone with a computer can pretty much produce something that would sound radio worthy at this point. But on the flip side of that, because of the internet and all these platforms, I think we have access to more music, and there's more music and content out there than ever before. So I think by nature, that means that there's more good music out there. You're just a lot harder to find it. I don't think the radio is the place to do that. So I think it just now, like with any information on the internet, requires more digging to find the good stuff. You would think that more access would mean better, but I mean, as we've proven, certainly in this country and around the world, more access to information doesn't mean more access to good information. And it's the same with music. It's very hard for the average person, I think, to sort of skim, to dig through all that garbage to get to what's either true or good with any content. So, that's my take generally
Yeah.
on that. Yeah.
It reminds me of the analogy. I feel like the radio station is like drinking music from a water fountain, and the internet's like drinking music from 10 fire hoses at the same time.
Yeah. The ocean. It's true. I think it's true. So, I mean, I think there's, just some amazing content, music and otherwise, out there. It's just much harder to find.
Yeah, absolutely, absolutely. Now let's get into the juicy stuff, the trading stuff. Now, being trading is notoriously difficult for a whole host of different reasons, and I want to get your take. Why do so many people consistently fail at trading?
I think actually I mean, there are countless reasons, but I think they all fall under one very specific umbrella, and that's that humans are inherently emotional and they just can't help themselves from doing the wrong thing, even when they know what the right thing is. Funny, like you think about like if you're dating someone and you break up and you get back together with them, and you break up and you get back together with them. But if your friend did the exact same thing, you would tell them what an idiot they were, and that, obviously you broke up with her for a reason, man. Like, don't go back to her. And it's so clear when it's not you, and that's very much like trading. It's very easy to read or hear someone like me talk about it. At times it's even hard for me to do it when I know exactly what I should be doing. So I think that it really comes down to risk management and emotional control. And that's the whole ballgame. I don't think the rest of it is easy. Anyone can learn to draw lines on a chart. Anyone can learn to, calculate their position size based on the size of their portfolio. All those things, you do need to learn them, but once you learn, they're very basic. Trading in a vacuum is, I think, a very easy thing to learn. I don't think it requires much intelligence. I don't think that smarter people make better traders. I think that people who can control their emotions and follow a plan make better traders. That's really the gist of it. So I really think it all comes down to emotional control.
I would tend to agree with you. It's amazing how much that emotional roller coaster can take over when you're trading. And certainly back in my early days, oh my God, it's pumping. I need to buy in. This is going to be the big thing. Or, oh, it's gone down so much. I need to sell. And all these classic mistakes that people make. And it's taken a long time to really rather unemotional about trading. And I actually, if I'm not in the right headspace, I won't even consider trading. I think something really people need to take home is that sitting on the sidelines and not trading can also be very powerful because you're protecting your capital in that situation.
Yeah, no position is a position. There's no question. And that's an old adage of trading, but it's very true. For me, I have to, same as you just said, I only trade during certain hours. I'm not the guy who checks his phone at 3:00 in the morning because an alarm goes off or something. I treat it like a job. I sit at my desk and I turn everything else off. I click off Twitter when I want to really look at charts, and I focus on what I'm doing. And it's my job. It doesn't take very long, but I have to be focused when I'm doing it. If I'm pissed off, I don't trade. If I'm, dealing with something else and my mind's not really in it, I don't trade. It has to be something that you do, as you said, when you're in a perfect headspace, whether that requires meditation or daily affirmations or whatever it is. All these things that seem like they might be corny or ridiculous, I think that for a lot of people, they'll probably make you a lot of money to find ways to get into that headspace to be able to trade.
The psychology of the trader is probably one of the most important aspects. Like I said, everyone can learn the basics of drawing lines. If you don't know that stuff, if you don't know how to use basic indicators and trend lines and all that stuff, don't start trading. Please go learn all that stuff first. But then you have to master yourself. That's the tricky part.
Yeah, absolutely. I posted a quote just the other day, but it was something that basically you're not trading against the market, you're trading against yourself. Like, you don't realize it, but it's purely an emotional venture. Have you ever seen the movie Swingers?
No, I don't think so. No,
it's an old movie, but there's a scene where Jon Favreau, who's a producer, he gets the girl's number and he hasn't been dating in a long time, and he gets home and calls her at 3:00 in the morning, and then the answering machine runs out, so he calls back. And then he calls back, and he calls her it's the most brutal scene in history, but he calls her back 15 times till by the end he's like, I don't think this is working, and he hangs up the phone. I feel like that's people revenge trading, they close a position and they immediately regret it and they dial right back in and take another trade and take another trade. Even if it's the same, it's like beating your head against the wall, same thing over and over and over again, and never learn. I've been there way in the past, and I know that people do it. I see it.
Revenge trading's a really, really big one because you lose, you're pissed off, and you want to make your money back, so you go and you start looking for something to make that money back, right? It's kind of this gambler mentality almost, but that's what we just said. Don't trade when you're pissed off. Don't trade when you're in a serious emotional state because you're not thinking clearly.
Touches on a huge but I think that touches on a huge problem for people who survived 2018, whatever survived even means. But I think that most people are looking to, they're trading to get their money back and not to make money. And even if it's the same exercise, I think that mentally it's a completely different thing if you're trying to recapture losses than trying to actually be successful and make money. I think trying to recapture losses already puts you in an improper headspace and with an improper motivation to trade. I think that you're never going to do it. You say, well, especially when people, it's again revenge trading, but when you feel like you have to do it on the same asset. Like, who cares if you make back your $100 trading Bitcoin or if you make it by cutting your neighbor's grass? You know what I mean? It's the same $100 you get back. So leave the house and go do something else to make that money, you know? But we've all been there.
That's true. Now, you've been trading for a long time, so what's the toughest lesson over your years of trading that you've learned?
I think that I don't know what the toughest lesson is, because I mean, I've busted out a lot of times and still not learned the lesson and repeated it. You know what I mean? So I think it goes back to the emotional control again. The hardest thing is to control your emotions, especially for me. I'm an inherently very emotional person. It's not about trading. In fact, I'm like really competitive. If I'm playing a board game with my wife and kids, I want to win, but I don't care if I win a trade. It's really kind of a strange bipolar thing that I have that just kind of, you know, you lose enough and eventually you just lose the emotion in trading, or you win enough and it also becomes a bit numbing. You know what I mean? But I would say that a hard lesson I learned was really to keep things simple. I have a tendency, or I think a lot of people do, this natural need to look for more information to confirm my idea, or to dig deeper, or to check another time frame, or to pull up one more indicator. And really you just end up with either conflicting ideas or analysis paralysis. So I think like once you learn that none of that really matters, it's just how you calculate your position and step away and just take small losses. I mean, it doesn't really matter what system you're using as long as you have a system, you know, as long as you have rules and you follow them. So pulling up another chart or another indicator, something that's pretty much just a reason to confuse yourself or make you probably make some sort of impulsive decision mid-trade that makes you sort of violate your rules or your plan. So I think the hardest lesson I learned was really to take the position and step away, you know, and just let it do its thing.
I like that term, analysis paralysis. I've certainly had that problem before. We just keep looking like this. It was something else that, you know, when you get your set of what works for you, because there's so many indicators. You don't need to look at every single indicator. You'll go insane doing that. Just need to find what works for you. And that's the most important thing.
Absolutely true.
Now, the idea of losing when trading, this is, I think, something that people who maybe don't trade very much aren't so familiar with, but successful traders lose a lot.
Yeah. Many of my profitable years have been with a sub 50% strike rate, meaning that I'm winning on less than half of my trades. But because the ones that I'm losing on are small and the ones I'm winning on are bigger, it allows me to be profitable, which is like the whole fallacy of being right is so unimportant in trading. And it's so counterintuitive to think that way. But it literally makes no difference if you're right or if you're wrong. It makes a difference if you're wrong small. I mean, that's really the core idea. And I've had years where I had a tremendous strike rate and have not done as well because I wasn't as tight with, you know, because I mean, we all know, especially with people trading with leverage in places like BitMEX, one loss, if you don't manage it, can blow up your entire account.
Yeah.
You could have a 99% hit rate and you could be liquidated for your entire account on that 1 out of 100 and have no money. So what does it matter how much you're right or you're wrong? It's irrelevant. What matters is if you're profitable. So, you know, profit comes with, as you alluded to earlier, with protecting your capital, not with concerning yourself with how much you grow it on every single trade.
Yep. And
like baseball, you're not going to, you know, a batter's not going to, a 300 rate is great as a baseball player, right? Maybe you're an all-star if you're batting 300. So, you know, that can be the case with trading as well.
It's absolutely true. You know, you're going to lose trades. The question is how big you lose them. And that's, I always talk about risk management when I'm talking about trading on the channel. And it's so gosh darn important to be actually practicing this stuff, you know, having those stop losses in place, not trading when you're emotional, all this stuff is part of your risk management package too. And to just really be understanding that small losses, they are much easier to manage. But one big loss, that can set you back for months or years if you lose 100% of your portfolio. Like, that's crazy.
Yeah, forever, because a 50% loss requires 100% gain to recover, right? It's not an equal weighted relationship up and down. So, you know, a lot of people don't realize if you have $100 and, you know, you lose 50% of it on a trade and you got $50. Well, yeah, you only need to make $50, but that means doubling. You know, you have less capital to work with and you need to double it just to get back to even. And that's goes back. I mean, it's the same thing we were talking about. People are trading to get their money back, but that's a fool's game. You got to kind of start fresh and do it. So yeah, you just can never blow your account up. It only takes one mistake to make you a poor trader, and for a very long time, unfortunately.
So you mentioned that you've kind of broke out your trading portfolio a couple of times before. What happened? Or maybe you don't have to go through every situation, but can you give us one of those and kind of what happened and what the...
I mean, a lot of it was not necessarily as a trader, but just sort of like poorly managing my money or my portfolio or what have you. Like, I mean, in 1999, I graduated college and I decided I was going to take all the money that everyone had given me and buy this like great mutual fund. It was like $5,000. I mean, it was like, like relative to, and then a year later, it was down like 60% and I was completely broke and I had to cash it out for like $2,000 to pay my bills, and that was like my life savings. So yes, that's kind of meaningless in the grand scheme of things. But for me at the time, I didn't have any money set aside to live. I put it all into this one investment, which was theoretically a safe investment. For whatever reason, that investment went bad. It was, I guess, overexposed to the wrong things after the tech bubble was bursting. And then I needed money and I didn't have a choice but to sell it at a huge loss. So, even if I just kept that in cash and not touched it, which, I advise, or any financial advisor, not me, would say, have 6 months worth of living expenses set aside in cash before you even start investing, because you need to have money to live on if you lose your job, or if you break your arm, if, any of these things that can happen. So that was the first one. The second one was when everybody lost all their money, which was 2008, 2009. Luckily, I didn't sell anything when it hit the bottom, even though I was tempted. And so that recovered, so it was a paper loss. It was never really a realized loss. But then I had like a great stock tip in 2011 or 12. Pharmaceutical company was gonna, change the world. They were getting FDA approval. I basically went all in with all my extra money on it, and it went to $0 within like 6 months. And I rode it all the way because everyone I knew who was involved kept saying, "Oh, it's great, delisted from the NASDAQ, zero, like literally worth nothing." So yeah.
It's crazy.
And the funny thing is, none of those things are really like as a trader. I've blown up minor, small trading accounts here and there by, mistakes or trading with too much leverage or things when I was sort of more of a gambler. But, most of the losses are just sort of overall bad decision making, which I think, compound that with now the ability, trading is like very in fashion now. So people are just giving themselves ways to lose more money and faster. I mean, every single trade you take is just an opportunity to lose money in my mind, not to make it. I always, and I say, you should plan your losses, not your gains, right?
Mm-hmm.
You're always sitting there thinking about all the riches you're going to make, but it never happens. What you need to think about is what's going to happen if you don't have any of the money that you're trading with, because it's a much more responsible headspace to be in. So,
which partially comes back to position sizes as well, because one of the classic mistakes that a lot of novice traders will make is they're trading with 100% of their portfolio. They're trading with 75% of their portfolio on single trades, or in crazy numbers like this. Whereas me, I tend to, most trades that I'm making, I'm working with fractions of my portfolio. Overall, it's, I might be having a, 0.5% of my total portfolio over on a trade or something like that. It's definitely not large percentages. So even then, if I lose on that, I've got my stop loss and I've only lost a small portion of my portfolio.
Yeah, and the beauty of that strategy, not the beauty of it because it sucks when it's happening, but if you take a major drawdown, 30, 40, 50, losing 40 out of 50 trades or 45 out of 50, you're working in percentages and not fixed numbers, which is a problem that people have. They just think I can, say I can spend $1,000 on every trade. But as your portfolio goes down, that becomes a larger portion. And that's part of revenge trading is people think you need to double down instead of, but actually, as you lose, you should be reducing your position size, not increasing it, which is counterintuitive for a lot of people. But that's because they're trying to get it back, not trying to be smart. And so if you're still consistently at 1%, your account's going down, you're actually risking less. So it allows you to lose on more trades because it's still less money that you're losing over time. So, that's sort of kind of the formula. So that's why it's very important to approach it from a percentage basis as you do. I never risk more than 1% of a trade, and I only trade with 15% of my portfolio, and crypto is only 10% of my total portfolio. So I'm trading with, 1.5% of my money is my trading account, and I'm only risking 1% of that on a trade. So like you said, fractions of fractions, which, the answer that you'll get from those smaller retail traders, the ones you're talking about, is, well, if I only trade with that much, I'll never make anything. Well, the answer to that is go get a job and earn enough money to be able to capitalize yourself well enough to make a living trading. It's absurd to be like, I have $100, I'm going to be a professional trader. It's like me saying I just found a baseball bat on the ground, I'm going to be a professional baseball player. It's really not that different. That the odds of success are probably equal.
Yep.
You have to be well capitalized so that you can practice proper risk management, so that you can actually live on what you earn. Are you a professional trader if you can't live on the money that you make? No, you're someone who has another job and is trading as a hobby, which is fine. I'm not begrudging it, but like all these people say they're pro traders with an account of $5,000 or something. How can you possibly pay your bills? Even if you made 100% every single month, that's still $5,000 is a lot of money. But if you live in New York City, it's not. You know what I mean?
Exactly.
Yeah.
That's very, very true. You don't. For most people out there watching, you might not even want to be trading at all. And this is something I say: if you don't have time to sit down and learn the indicators, if you don't have time to, you'd actually be watching and be emotionally sound and all that stuff, you just buy Bitcoin and hold it for long term, and you don't need to be playing around. Exactly.
Do what people have been doing since the beginning of investing, which is keep buying stuff whenever you have extra money that you don't need, and check it every quarter to see if you need to rebalance or if something went wrong. That's it. Guess what? Every kid out there who's driving a Ferrari, whose dad made generational wealth and whose grandfather made generational wealth, that's how they did it.
Yep.
There are people who just were smart with their money and saved it from, decades and decades and decades ago. I mean, you look at the stock market goes like this. There are like tiny little moments. Even the Great Depression was actually a buying opportunity, not a shorting opportunity.
Mm-hmm.
In the context of, the larger time frames in the history of the stock market. So all you've ever had to do to save money, you have to make it first, of course, but is to compound interest on your gains. Just put it away and don't touch it for as long as possible. That's literally all there is to it. That's better than any trader is going to do. That's a better strategy than trading. That's all you need to do. So if you happen to believe that Bitcoin is one of those assets that will trend up over a long period of time, like you said, all you need to do is take your expendable income, the money you can afford to throw away and not touch, not like I did in 2001, and just put it there and don't look at it. Yep. Don't make any decisions, just let it go.
Simple. Seems so simple.
That's how money has been acquired since the beginning of markets.
That's it. And it requires a lot less skill to do that. You just need to go and buy your Bitcoin.
The richest people in the world have probably never opened a chart.
There you go. That says a lot. And when you think about that, people think, why should I be trading at all? Well, some people shouldn't be. But, if you're into it, if you like trading, if you like
it's great.
Yeah, it can be a lot of fun, right?
Yeah.
So that's something to keep in mind too. Now, you brought up stocks, so I wanted to ask your opinion on this. What do you see as being the key differences between trading stocks and trading cryptos?
I think it's a completely different world. Crypto is more fun for everyone because charts work better. When there's no fundamentals, all you're left with is technical analysis and trying to, it's more of a game trading crypto, right? You're trying to figure out where everybody else's emotions are and what the whales are going to do to you and how to be on their side and not be the one who's getting eaten. And you do that by looking at a chart, right? You try to find areas of likely liquidity. Where will they go? I mean, what are lines on a chart anyways for any market, but really for trading crypto? Lines on a chart are just a visualization of our emotions, right? This is where people got scared. This is where people got greedy. And so we want to counter trade that and find the areas where the pendulum's going to swing. Stocks, listen, I mean, charts work to whatever degree you want to say. The same phenomenon are in play, but it really matters how much money Amazon makes for their stock. There's a fundamental their quarterly earnings matter, their profit costs matters. What they're investing their money in matters. So I don't think that's not true of any altcoin project, certainly. And Bitcoin is more, I view Bitcoin more like an ETF, even though we don't have one to trade, but I view it more like the SPY. It is the market. You're tracking it. It's the Dow Jones, right?
Yeah.
And so, but unfortunately in crypto, like everything's sort of tied to that. So like, we all know what Bitcoin does to alts when it moves either way, fast. You can still find stocks that sort of, like Tesla, for example, will trade against the market. The market can be doing terrible. Tesla can be doing amazing. It's just kind of its own thing. And so I think trading stocks, Forex even, which, maybe the sort of like strange intertwining of the two, where there's more fundamentals, but technical analysis also seems to work. I think stocks, you really need to understand the fundamentals of the company that you're investing in and why. And that's why, at a hedge fund, the most important guys aren't the guys who look at charts, they're on Wall Street. They're the guys who call the CEO and ask them, how many people did you lay off? What are you looking at this month? Who listen in on the earnings calls, who understand the technology, So I think fundamentals are the key to making money in stocks. And for your average investor or something, it's pretty easy to just put money into big companies or something that tracks the market and do well. Because, I have a lot of money. Like I dollar cost average into Amazon. I've been buying it for years. It's just, I think Amazon's taking over the world. So why wouldn't I want to own something? I don't think that way about Chainlink or Ren, whatever.
You just triggered all the Chainlink warriors, man. It's gonna be brutal in the comment section now.
Recently, just under $2 because it finally got to where I was interested. But I'm just saying, like, maybe some of these will change the world, but they're not companies that you can do a fundamental analysis on.
That's it. It's such a good point. What we see right now with cryptocurrencies is just massive amounts of speculation. You see some of these cryptocurrencies that have valuations in hundreds of millions or billions of dollars and don't even have working mainnets and stuff like that, let alone any value actually secured on their networks. And you realize how strong the speculative nature of the market is compared to real world companies with real employees and real revenues. And not to say that these companies don't have developers working behind there, but it's just so different what we're talking about here. It's so speculation driven.
Companies did.
What's
like
that?
They raised more money than any of these companies did. It's such a, like, there's companies that raised $100 million that probably in the real world would have just raised $1 million to like develop and do what they needed to. And
EOS raised $4 billion. It's crazy.
What? For what? You know what I mean? Like that company probably could have been 5 guys in a room with a few $100,000 who bootstrapped it to, like these things. So it was such, like just an absolute moment in time, such a strange, weird bubble in 2017, just such an emotional roller coaster. And listen, I think good projects will emerge. I do think, obviously, I think we all believe that, inherently the tech is going to change the world, blockchain itself, you know what I mean? But I can't say that any of these individual companies are going to be the ones that do it, or that their coins will matter even if they do. That's the funny thing, is maybe the tech or the company or what they're doing will matter. The whole Ripple XRP thing, right? Ripple could be an amazing company and XRP could be useless. I'm not saying it is or it isn't. I don't know anything about it or particularly care, to be honest. But, I think that that's another sort of problem here. So it's, as you said, it's complete speculation, which is why it's so much fun to trade.
Yeah.
Because you don't need to care about any of it. I see people get very emotionally attached to these projects. I find it like laughable. I mean, they might as well be like poker chips or pogs or something, baseball cards. Like, I don't even know what these companies do. I would have never, like a stock, I would never buy or even trade a stock if I didn't know anything about the company. These, I literally don't even remember the 3 letters like 3 days after I traded it. I can't even tell you what it was. I can't remember trading for 2 weeks. I don't know what they are.
In terms of the long-term holding of some of these coins, I mean, obviously there's a lot of potential for some of these to have insane gains in the next runs and stuff like that. But you brought up a good point, do not get emotionally attached to a cryptocurrency. It is not your friend. It's a logo and a 3-letter ticker or a 3, letter ticker thing, and it's just there's a community of people who are totally of developers who are totally unaccountable to you and all this stuff. don't get emotionally attached, right? You're not betraying your community by selling a cryptocurrency.
You can look at someone's Twitter name or check their profile, and like based on either like what's in their Twitter name or what hashtag is in their profile, you can basically tell like how polite or mean they're going to be to you on the internet.
The bag holders, man. Now, you brought up a good point about 2017. I want to follow up on with you too. Is that 2017 was this time of insane exuberance, and it was, the big alt season, right? When everything, you just open up your portfolio, everything's gone up by 200% today, just because, right? They hired a new guy to make coffee, 100% pump.
New logo pump.
Yeah, the new logo. Oh, it's so big, it's gonna change everything. 300% up. That was insane. But there's a lot of people who are sitting around waiting for a new alt season to come, and I think if we do see that, post having new peaks for Bitcoin, yeah, we're going to see a lot of altcoins moved up in a big way. Won't be the same as 2017, of course not, because things never repeat. That history does rhyme. But what are your thoughts on trading alts right now? Because I feel like there's just so many opportunities out there. It's been insane for anybody who's been watching. It's like, oh my gosh, there's alt season. What are you guys waiting around for everything to pump at the same time for? And there's stuff pumping all over the place.
I take so much like abuse for this on Twitter. I flat out called alt season 4 months ago. I said, guys, like there's alts going up 30. This is in September, maybe.
Yeah.
They're going up 30, 40% every single day.
Yep.
The other thing is people have this fantastic view of revisionist history of 2017 that everything was pumping at once, which happened a couple weeks. There were times it happened, but still, if you opened, CoinMarketCap or something, there would be, the 20 coins that were up 200 or 300%, but there was a lot in the red still every single day. Everyone says everything was pumping at once. It's not true. There were tons, and that's why FOMO was such a problem, because people were holding bags and something was always popping. So they'd move out of theirs to try to catch that. And then the one they were just in would pop, but they weren't all happening at exactly the same time. And that's, it's people just sort of having this fantastic view of what it was, and it wasn't. And effectively, the same thing is happening now, just with slightly smaller moves, and has been for 4 months. This has been one of the most profitable trading times. And when I say alt season, people say it can't be alt season until everything does this or everything does that. And all you're doing is emotionally like preventing yourself from making money. Who cares? Like if this is alt season 2.0 or this is another alt summer or alt spring, it's not as full season. Call whatever you want. For me, alt season means a time when alts are safe to trade and you're going to consistently make profit. And that's not usually the case, but it has been that way for almost half this year. It really has. And people just refuse to believe it. It's the classic, Wall Street model disbelief down here. I think people have been in disbelief about alts for all this time. And the other thing is I think people like, it's only alt season if your alts are popping, right? So like,
inevitably.
Clearly dead and down 97%. And anytime there's a 5% people are looking to sell, those probably aren't going to pump. But think about it. When those were pumping, they were new. And then you look at all these like IEOs on Binance, these Maddox, whatever, they're pulling full 2017 moves where they go way up and then they crash and everyone calls scam. And that was what you loved in 2017.
Yeah.
I
love that volatility, man.
Don't have a million people looking to sell are behaving like they did in 2017. So I think for me, I view this as full on alt season. Like I wake up in the morning, I look for alt opportunities. There was like a year and a half where I wouldn't even bother opening alt charts. Like every once in a while I'd see someone mention something or someone be like, can you chart this for me? And I'd be like, I guess, why? But, and then you go to exchanges like, I don't even know how to pronounce it, Huobi, Huobi,
something like
that. They've been like full on alt season. I don't trade there, but like it's this entire year has been like 100, 300, 400% pumps of most of the coins. So again, alt season is in the eye of the beholder, I guess. Like yes, if you're holding Litecoin and BCH and XRP and all these huge names, it takes so much to move these things. But something that's brand new and has brand new and shiny and it's a lower market cap and can easily be moved, these things are going absolutely nuts. You can't put $1 million into it and expect to double it, but you can certainly make a few Bitcoin a trade very easily on these things and make a very good living trading altcoins.
There you go. There you go. It's about looking for opportunities in the market. And this is one thing that I'm always saying about the market. There is always an opportunity in this market. It's crazy. It's crazy. You just have to have the eyes to look for those opportunities, and it's always out there. It's always available for you, which goes back to if you're not feeling good about trading, they're like, oh yeah, there's alts pumping right now. It's okay if you're not ready to trade right now. If you're not feeling it, sit on the sideline, because next week, you know what? There's going to be setups for you too. There will be opportunities next week or the week after that.
Yeah. It all eventually comes around. You know, you just sit around. It's like watching paint dry. You just sit around and wait, and then all of a sudden something maybe happens, and make your money all in those few times when something actually happens. The rest of it, you're just sort of chopping up small gains, small losses, and then you catch that one or two big ones, and you have hands strong enough to sustain it, and you know, a strategy to exit in some really good profit. You're going to make plenty of money.
Now the final.
Don't lose your money.
Don't lose your money. Don't lose your money, guys.
I don't remember what the core of it, but it was like people were so befuddled by it. It was a few months ago. Something to the effect of like, if I had a crystal ball and told you that in 2021, you know, Bitcoin would be worth $100,000, would you trade or would you just buy from now until then? And almost everyone was like, I would trade to get more Bitcoin and be able. And I'm like, what is wrong with you? Like, all people, they can't. I'm telling you, they can't help themselves. I would literally just start selling everything in my house and buy it and never trade any. I would just get as much as I could and understand I didn't want to lose a penny of it. You know what I mean?
You're telling me I'm going to guaranteed 10x my money in 2 years. Yeah. Like, that's insanity. That's insanity. Yep. You're right. You sell the kitchen sink, man. You can buy a new one in 2 years.
This market would have no Bitcoin left by that time to capitalize on.
Yep.
I think people have that little emotional control. You know, like
the greed takes over.
Also, the other thing is, it's all like millennials and younger people who have never experienced the slow grind of like accumulating money in a real market. You know, like 20% gain on something now is so trivial in crypto. Like,
you only made 20%.
That's like 10 years of trading in the stock market. Get something to go up 20%. You know? So spoiled, but to their own, you know, to their own, not to their own benefit. It actually hurts them because, you know, nothing's a good enough opportunity for me, man. If I lock in 5% on something, sometimes I'm totally happy with that because I know how hard that could have been somewhere else.
That's right. 5% is 5%, and that's good. That's good, guys. Now, the final question I have here for you today. What long-term cryptos are you holding, or are you holding any cryptos long-term?
Bitcoin. I started. I did when the market was really bottomed out. I bought a lot of Ethereum when it was like $82. I just happened to luckily time the dead bottom of the market on that. But I sold a lot of it when it got up to the 300 area, and and I've traded it a bit, but like I'm really not much of a holder. You know what I mean? I think that because of my trading mentality, like I hold Bitcoin, and so like you know, the majority of my crypto portfolio is Bitcoin. But the way, as we discussed before, the way I've seen the market go, like I'd rather trade in and out of these things than really, you know, date rather than marry altcoins to some degree, because I think my goal is really more Bitcoin. You know, when I'm trading, it's so I would love for some of these things that I'm trading to become longer term bags. You know, for example, like buying a link under $2. If that can, tomorrow it could be $1 for all I know. You know what I mean? But if that becomes 3 or 4, I will certainly hold on to some of it. And you know, I do often on something that looks really good, you know, I'll trade out of 80 or 90% of it, but keep that, you know, quote unquote moon bag that everyone talks about and sort of move that over to the longer term. So I do have some stuff there. And I have some underwater bags that I got that got a little too heavy, but they're not things I'm looking to hold forever. They're, like I said, kind of things I would look to get out of with time. You know what I mean? Mm-hmm. Most of them are averaged down to a point where I'm pretty comfortable with the amount of loss and what that would mean to my portfolio. So even if they went to zero, it wouldn't, you know, blow me up at this point. But there's nothing that I'm not like a fundamental guy in this market. Like there's no project that I'm passionate about or really care deeply for. I think they're all the same for a trader. If you're an investor and you really fall in love with one and you want to buy it, I don't blame you, but you shouldn't even be checking the price then. That's the thing, is people behave like traders when they're investors, or vice versa.
Mm-hmm.
If you believe in a project long term, you should be completely just never look at it and check the price in a year. You know what I mean? Because if you have that much passion for it, what does it matter what the price is today? I'm not saying that's smart, but I'm saying that you're more likely to maintain that passion if you don't get sidetracked by trying to trade it. So I'm a Bitcoin maximalist, I guess, in that regard. When it comes to my portfolio, that's what I want more of, and I'll trade alts to get it.
Nice.
I'll trade alts to make actual money. Like when I make profit on something, yes, it makes profit in Bitcoin, but I also cash out to pay bills.
Yeah.
Yeah.
That's another important part of taking profits, especially for someone who trades a lot.
In 2017, I was in like some groups and stuff, and I would tell people that every Friday I just sold Bitcoin. Like not all of it, but like enough to pay my bills or whatever. And they were like, "You're insane! You gotta hold it. It's going to 100,000 and whatever." Even when it was 5, 7, 8, whatever. Like I just got into a habit of always viewing it as a job and taking a paycheck, regardless of the price. And I think that was a very good habit. I do remember selling a lot of Ethereum at like $1,200 and being like kind of a little upset about it. I was like, oh man, what if this goes to like 10 grand? I've been there like everybody else. So that was almost, 14 was the top or whatever, but I was buying it again for $80. But, for me, I have to actually make real money, not just Bitcoin. To me, Bitcoin is an asset. It's not money, because I can't pay my kids' private school tuition with it yet.
Yeah.
So,
well, some private schools can. Depends on where you are, but that's a different conversation for a different day, Scott. Awesome, man. Thank you so much for taking the time to come and sit down and have a chat with us. Very, very insightful, very interesting comments on the markets and trading and all that stuff. So I really, really hope that there was a lot of value in it for everyone. And for anyone who's stuck around to the end of this chat, remember, again, there is the link down below where you can follow Scott over on Twitter and get signed up for that free newsletter, guys. Free newsletter is free, so make sure you check it out. Scott, thank you so much.
Thank you so much, man. I really appreciate it. I had a great time.
Thank you.